Hello and welcome to another episode of Digi-Tools in Accrual World. This week's episode has been sponsored by Xledger. Xledger are transforming business processing with a progressive cloud-based finance solution. Today, I am going to be joined by someone altogether very different. And if you've never watched Spider-Man before, then I'm sorry, this is probably lost on you. But it's the man in the seat. It's the man behind the curtain. It is Leigh Stallard. Hey, Leigh, how are you doing?
Good, thank you, Indi. How are you?
Very well. It's nice to have you on today's podcast instead of our usual John Tuna and Ryan Piercy. So it's nice to be able to hear your perspective because you've been in the weeds with most of the accounting tech guys and finding out more about this week's app news, which sounds quite juicy from the
Yeah,
changes that have taken place in this last week.
might be a spicy one this week. There's a few bombshells that have been dropped on the app community just in the last day or two as we record. So, yeah, excited to get into that in a minute.
Exactly. And beyond that, Leigh, because no one has really understood how we all work together and what it is that you do, I think it would be a perfect opportunity for you to say that on the intro today in our podcast. So give us a quick 30 seconds, Leigh, on your background, you and even just how long you've worked with us, because it's been years now.
Yeah, been behind the camera, I suppose. You coaxed me out to the other side for this episode. So I've been knocking around for about 20 years in this space. And the biggest issue that I see is around activation, or I call it the activation gap. So accountants and bookkeepers buying software that they don't actually then go on to successfully use in all cases. And that ends up just sitting like shelfware, right? Just empty subscriptions sat there. I think it's a real challenge and I think it needs to be solved. So I'm working with a few vendors on how they improve that initial onboarding process with things like change management and digital assets and behavior science and all that sort of stuff as well to try and help people get the most out of what they're buying. So that's what's keeping me occupied at the moment.
Nice. And so we've gone full tech heavy this episode. And so I'm sorry if you'll miss John and Ryan's dulcet tones, but don't be afraid. This one is worth it. Obviously, Leigh and myself have both worked with different vendors in the space. We're really coming at it from the tech perspective. And Leigh has the beating heart of the community in his ear hole, was what I was about to say. But anyway, he has that. So we are about to hear all about it in this week's app news. We hope you enjoy it. Okay, so kicking off this week's app news is a good news story, which is great for our community. So we're going to talk about the award winners this week. And Xero announced that they have got a series of app award winners for 2025. In the People's Choice Award was won by Mayday. Mayday, obviously, for those who don't know, automates complex intercompany accounting and revenue recognition, which enables you to mend the month end with less spreadsheet stress. I did see that they had posted within their community in the CFO tech stack to all of their global users to help them win the big one, and they did a really good job of that. So well done to them. And a couple of others to recognize as well. Innovation App of the Year with ServiceMate. Again, really good for their AI phone agent capability this year in terms of helping tradies to log the jobs more quickly. Emerging App of the Year was Subsync by FinLert, which transforms the fragmented Stripe data into structured, compliant accounting records. And then we've got a few others. The Global Small Business App of the Year was Paid Nice. We had some other business app winners of the year in different regions. So for our region in the UK was G-Acon. I really loved watching the award winners post their videos. In particular, my favorite though was with HR Easily in Asia, which was just so much more of a celebration. So I loved that video. Well done, guys. Global Practice App of the Year also went to Giacon as well. And again, Giacon empowers finance teams to scale without adding the overhead. And there were some other winners in other categories, some of whom that we know really well is our beloved and wonderful and must be treasured at all costs Socket, Jonathan Gaunt, who won in Canada and Ireland. So well done to the whole Socket team on that. Really good to see and hear him on his winning video. So well done, guys. Good job.
Yeah, absolutely. A little shout out to Content Snare as well in the UK for I think the practice app of the year. It's obviously sponsored the pod and things, but they've broken through recently. Like one of the Australian Invasion gang, and Tom Johnson, who I used to work with, is over there at the minute. So yeah, congrats to them as well.
You are right. I missed that one. In United Kingdom, content. Brilliant news. What about Xero doing something really good? Weirdly,
Yeah.
on Xero doing something the total opposite.
Yeah, I'm sort of first episode in and I'm picking up the bad news. So yesterday morning, as we record this, Xero dropped an email out to their ecosystem partners announcing a new metering system, a new charging system for their API access. So this might be unknown a little bit to some of the accountants that are listening, but the way that Xero bills for it at the moment is to work with each vendor and figure out what an average revenue per client looks like for them. And then wherever Xero recommends a customer, so that when someone signs up through the Xero marketplace, Xero will just levy a charge based on percentage of that average revenue. But it's all sort of done with agreements and sort of figured out and whatnot. But they're scrapping that and moving to a fixed tiering model where you get so many hits to the API and so much access based on certain steps and levels that you might purchase. There are some very small vendors that now are going to find their costs are massively exploding. People are wondering about the cost to serve their clients and their customers, and yeah, people aren't happy. Indeed, people are not happy one bit.
You can understand why, because as you rightly point out, there's the fee changes are one thing, but in particular, the prohibition of using that API data for training the AI models that we currently have without permission from Xero, which takes us down a whole other category of who really owns the data and whether that then becomes something that is held to ransom, which has been on the accountant's mind for years because we've seen some slow creep of that in how Xero has interacted with end users that use Xero, bypassing the accountants in many cases. But this time is going a step further and even having impact on the softwares that are within the stack and the ecosystem that everyone has become accustomed to.
There's some real challenges with that, but I think having spoken to a couple of vendors and whatnot over the last day or so, I think there's the likelihood that reporting apps will be disproportionately disadvantaged with this, because it seems that if you're pushing data into Xero and using the API for that, that's less of an issue than if you're making data requests and pulling it out of Xero, and particularly if you want access to journal level stuff. So things like Fathom, Castaway, forecasting and reporting apps really need that detail, need to pull it out. They're going to have a real challenge. But then when you think of things like Clarity and Dex Precision and stuff like that, that are trying to present dashboards to the accountant to help them with their workflows, they may have a real disadvantage as well, particularly if they're not charging a massive amount per client for these things. They could find whatever margins they've got get eroded pretty quickly. So it could be really challenging. And there's a few interesting dynamics as well, because it means that vendors are disproportionately challenged if they're at low scale, because they've got this initial overhead that they've got to get over when they're really, really small. So there's an impetus for them to get to scale quickly to start to cover some of these costs. So how it will shape behavior over time, I think, is a fascinating concept. But also the other threat is that then there's the potential for less new innovative apps to come into the space as well, because they've got this sort of hurdle to get over. So yeah, it's really put the cat amongst pigeons.
Yeah, I echo your last sentiment precisely. I think it's Xero is doing this tactically to also hamstring some level of innovation, which it may also want to explore for itself. Why not? Because there are so many businesses that have built off the lack of what Xero has, and yet it can also see itself as a central player to this. So one thing is that this moving from what seemed like quite a fixed architecture is what you see in other applications. It's more popular now. And I think that is something that we're going to see changing and evolving. The thing that will make it less desirable overall is going to be how it's priced to the accountant when the supplier who is stung with a higher bill, and it is much more variable in its nature as well, because it's usage based. How does that translate to what the accountant then has to pay? Is it just rolled up into some sort of clunky, okay, price increase to the software SaaS model because that's what you have? Or do we have the same kind of sophistication that's then demonstrated to right the way down the chain to the accountant? It's usage based. That is the one thing that I think we might see, is that that evolution is, it's starting to come through with other software applications in other markets. So if you look at things like Lovable or Replit, you have usage based price plans that will then say, okay, you're pulling this much more or you're using this much more. So therefore, incrementally, it adds, I don't know, maybe $10 or something on a one particular project, but you might incrementally on another project with a different client say use $1 because they're not using it that much. So that's the one thing I think that we're going to see coming through, is that change to even the way that the accountant prices.
I've heard from some vendors just today who were saying that what we might have to do is say, if you're going to have a Sage or a FreeAgent connection, it's this cost, but actually there's going to be a surcharge on top now if you want to come through Xero, because we have to cover that cost. And I don't think that's going to play well with accountants.
Oh God, what a nightmare. What a mess. How is this going to affect some of the other companies that we spoke about, previously, the extensions, the Maydays, where
Yeah,
browser extensions? What's the thinking on that? Because it will affect them as well.
it will. So while you've got the metering stuff and the costs, which will obviously affect the commercials of those organizations, it's a really interesting, I think it's almost the last line of the blog post from Xero, which says that you can't use the data for training AI, which was touched on, but also you can't use things like browser extensions and you can't simulate user behavior. Now, there's a couple of tools out there at the moment that are really innovative. One of them is Mayday's bank rec across a group, and the other one is Dextension. I'm not sure about Mayday, but I know that Dextension is a free tool. Now, this may end up meaning that those tools, those extensions, those features are no longer allowed, and that will be really interesting when you see then some of those vendors will be hit multiple times by this change in policy. And actually, as you mentioned a second ago, Indi, Mayday being the People's Choice Award, have just picked award up from Xero recently as well. And obviously Dex, one of their oldest and closest partners. So how this affects those relationships will be really interesting to see as the sort of people get into the weeds of this.
It's a kiss and a slap at the same time. Ah,
It is. But the winners, I think, will be people like FreeAgent to an extent, who are still challenging, building their ecosystems, and apparently don't have plans to charge for the API. You've got the likes of Sage, who are waging a bit of a charm offensive at the moment, taking people on boats and buses and stuff. And I don't believe they charge for the API on the small business products. They do on Intact and the more enterprise things. Then you've got others like Xledger and iPlicit, who may pick up some clients if they find that actually it becomes too expensive or cumbersome connecting too many apps to Xero to work for the mid-level enterprise. They may just go, actually, let's just step up and go to one of those tools as a result.
yeah, let's see how it comes through the wash in the year. The thing that's going to be interesting is, does Xero walk it back? If they don't walk it back, then how does that pricing affect the next layer of the software vendors that benefit the most? And then if that pricing is still something that's palatable, maybe Xero just doing this as a very good strategic play, which is, we see that we can extract a lot more value. We see that this would make it more difficult for new entrants to come in, and therefore people benefiting from our data, where actually we want to try and build those same things ourselves. Let's say treasury agents or the like. These are the sorts of things that Xero, they tampered or played with the idea of and having AI, and we're seeing that Jax is starting to now improve, let's say. So I think that this might just be a tactical gameplay as well, to try and then stop that themselves hemorrhaging all of that data and not being able to benefit from it themselves.
Yeah, it could be a defensive play, and you could imagine a scenario in a year or two time where you've got 100 different AI vibe coded apps that are all just sucking data out of Xero to train bots and things like that, which probably isn't a scenario any of us want.
Yep.
So putting a bit of a moat around that to protect against that scenario, I can see the logic behind that. So yeah, we'll see how it pans out.
It's also why I think we're just got to be patient for a moment. But I love the reaction that everyone has. By the way, Xero, it's not your data. Courtesy of Alistair Barlow. I love that reminder. But speaking about Xero, they have dropped 3 new reporting enhancements. And before we all roll our eyes and say, great, another update that saves me 5 seconds, these ones actually might matter. So first, we've got formula rows that can now display as a percentage inside Xero. So no more exporting to Excel. just to show marginal variance. It's a small one, but for many firms, and I know that John has spoken about this before, it's one less round trip out of the product, which is nifty. And for once, the feedback from an advisor was that we won't need Excel for this part anymore actually rings true. So second, Xero has tackled one of the profession's biggest irritants, bad mapping. So they've improved the default code mapping for new clients and added an unmapped accounts warning directly in reporting templates. That could stop the classic month-end facepalm where you realize a dangling account has torpedoed your report layout. And then third, this one I think is a sleeper here. You can now copy specialized formatted data straight from Excel into trading statements with formatting intact. It's aimed at agriculture and niche industries, but this is useful for anyone whose clients live outside Xero's happy path. It won't replace Excel, but it stops the copy and paste carnage and lets Xero reuse your custom reports inside advisor packs. So you don't have to rebuild the same report over and over. Are these groundbreaking? No, actually, but one of the things that they do, they're quite clever, they're incremental upgrades, and they're addressing something that the accountant actually asked for rather than some AI glitter that's thrown on top. I think this one is one that John Toon will very much approve of because we had a little chat about this and he said that let's hope these sorts of changes continue to stick.
On the theme of quality of life updates, we've got some updates from Workflow Max as well, which has dropped off the radar a little bit, I think. Well, certainly for me anyway, since they broke away. So Workflow Max, you can now revise purchase orders without re-raising them, which seems like again, nice little quality of life improvement. I'll be curious about how you make sure that someone doesn't do that fraudulently after the fact, but quite a nice little touch there. You can export reports for very large reports. They're talking about reports at 100,000 lines, so really chunky things. They've added a new feature where you can wait and let the product work on the report and export it in the background, and then you come back to an exports tab later on rather than have to sit there and watch a clock spinning around while it generates it. And that paves the way for them to create scheduled reports later as well, so you can get them to run at certain points in time. Seems like a really nice little workflow, and when I read that, I wondered if there was some sort of application there to use that with AI agents and say, well, the report's going to get run at this point, so then you bring an agent in to pick the report up and do something else with it. I don't know if that's what they're looking at, but it's an interesting use case. Some of the little tidying up things is you can now pause your timers when you're doing your timesheets. And what I thought was really cool is a little calendar widget on the dashboard, which will now show you what tasks you're working on, and you can look at them on a calendar view, which I think is really interesting. I am myself trying to deal with my tasks that way and kind of time block and put them out in my calendar so I can visually see what I'm working on. So it's quite a nice touch in there. You can create jobs on mobile and some other reporting enhancements. The full article is linked in the newsletter, so if you want to see all of the detail, then join the newsletter and you'll get that. There's betas for Zapier, Kanban boards, and percentage billing, and an updated API as well. So some really nice touches there, and I think it's quite refreshing to see actually someone just bringing out features of the things that they're good at, iterative improvements, just moving it forward, show they understand the customer.
Yeah, I think that sounds really good. I have something that's relevant to MTD, which I think is still we should be really hot on the agenda of, because it's coming around the corner. When it comes, FreeAgent MTD updates for visibility and control. FreeAgent has launched a new MTD for income tax submission summary report and practice level controls to help firms manage compliance deadlines effectively. So when you compare the MTD tools across the vendors, FreeAgent's direction is noticeably more practice-centric, and they've always said this. So Xero and QuickBooks have MTD components, but they often feel a bit like add-ons. You're still stitching the systems together, managing the quirks, or relying on external trackers to stay organized. So FreeAgent's approach has been much more integrated as a result, and they have submissions, timelines, client access, and approvals all live in one place. So that reduces both the admin and the risk. And it also gives you one of the big things that it gives you is such a tight control over whether clients can file themselves. So if your priority is visibility, consistency, and fewer surprises at the quarter end, then FreeAgent currently looks like the most joined up option, in particular for those smaller businesses, and also for the smaller firms that are facing MTD at scale. But yeah, it looks very good. And I think that's something that sets them apart in terms of what they can do. The firm themselves can switch on the approval, off the approval for all MTD submission types, and with changes tracked in the audit trail. So nice little change from them, and good to see how they're approaching this subject.
Yeah, they've really dialed up the accountant channel over the last couple of years, haven't they? They're really banging the drum for this. I think them and FreeAgent and probably Sage are the two that really are making the most noise about MTD, aren't they? And seem to be going out of their way to support partners with or accounting firms and bookkeeping firms with really getting around to the new workflows.
Yeah, I'll be really intrigued to see what some of the other guys who are really at the small firm end of the market doing as well, which Free Agent does a very good job about, like you said. Sage has banged the drum a bit more. Very curious about what KPM are doing. Really also curious about how TaxCalc are approaching this. And we've got TaxPad, the newbies on the block. Let's see what they're doing. I haven't heard a thing from Bright. So very nice to see how Free Agent approaches, but I think we'll come back to you in the new year with some of those ones on the lesser banging of the drum, but still really big firms and big tech companies in their own right. So let's have a look at what they're doing.
Yeah, absolutely, indeed. You mentioned TaxCalc a second ago, and they've had a big bash, haven't they, over the last few days and weeks, and made some big announcements. And one of the things that they've talked about is the two-way integration between TaxCalc and Engager is now live after 6 months or so after the acquisition. Some of the stuff they put in there looks really nice, actually, and it looks like it's been really carefully thought through. One of the elements of the integration is service safeguards that prevent workflow steps in Engager from progressing until key actions in TaxCalc are completed. And I know there's a real appetite among firms at the minute to create more automation around their workflows and have tools manage these things rather than just spit a task out to go on someone else's task list to go, this has been done in TaxCalc, now let's go and update this in Engager somewhere. So the fact that those two are talking to each other, I think, is really interesting and opens up some really nice possibilities for firms, particularly as they've got full file sharing between the two, client documents and the portal going straight into the TaxCalc database. Again, I've been working with firms, and just that issue around documents and getting them to the right places is really challenging. And it's so hard to build an integrated workflow between so many of these different tools. So there's some really nice promise there. And the other key feature that was drawn out in this article from Accounting Web is the enhanced client questionnaires with pre-populated data on it, pulling it in from the tax return. And that's really critical because getting clients to actually do the work and submit these answers and engage with the queries is really challenging for a lot of firms. And the easier you can make things, the more likely they are to do it, right? And so having some of that stuff pre-populate and pull through is just going to lower that barrier to getting clients to actually give you the stuff that you need for them to work through. So some really nice touches in that integration, and interested to see what they do next.
Yeah, it's a really good hookup. In general, it's a good hookup. For TaxCalc, I also have something on them as well. They also formally announced they're moving the tax and accounts production tools into the cloud, into the browsers. And what they have done differently, so unlike some of the other vendors who've strong-armed the firms into cloud migrations, TaxCalc is promising something radically different, choice, a choice. So the browser version will sit alongside the existing desktop app with the goal of full feature parity over time. The desktop version will remain available as long as the customers want it. At some point, I'm sure they will sunset that, but it's a direct response to the trauma firms have suffered during previous forced migrations across the industry. And in general, I think it gives them a good walk back option as well. We've seen that with, I think, was it WK last year that tried to do that, and there's always a walk back. So this is a nice kind of run it alongside and then see how you go. It's not a rewrite, but it's a restructured TaxCalc engine with a front end designed to maintain the same UX while unlocking deeper integration, such as a newly launched two-way sync with Engager that you mentioned. And that it means that the client records will stay aligned and workflows trigger the compliance tasks automatically, and the document handling becomes more cleaner and more centralized. I think that will be interesting in terms of their document storage and management, because TaxCalc has used, I think, in the past, a third party for that, which has been cloud-based. So let's see if they bring more of that in-house. Pricing has not been announced, but TaxCalc is suggesting a like-for-like cost where the functionality matches. So with cloud only features, they will be priced separately. So if it all lands the way they're positioning it, firms could get the rarest outcome in accounting tech, a cloud transition that doesn't force the disruption, doesn't break the workflows, and allows you to carry on going without abandoning sort of desktop loyalists who also want that control. Interesting. I don't know if you spent some time reading or learning or hearing about the accountant's reaction to that, but I think that was fairly predictable as well. So there was a fascinating split. So you've got some TaxCalc users who are thrilled that finally there's a cloud option without losing the fast and stable desktop that they rely on. But the dominant sentiment is caution, because people see it as a first strategic move since the company took private equity investment. And that means that everybody who remembers this movie has seen it all before. So there's a lot of comments referencing Bright Pay, forced cloud migration, Iris's acquisition trail, repeated examples of full feature parity that never actually arrived before then the desktop gets sunset. So many are expecting price hikes within the year, or that cloud will quietly become the priority while desktop stagnates. But in short, I think the accountants like the direction, but they're waiting to see whether TaxCalc becomes the exception to the PE playbook or the next chapter in it.
Yeah, it's a challenging one, isn't it? From a technical standpoint, and that might just be my ignorance, I don't know how easy it's going to be to maintain two versions of this product, because they'll be built on different code bases, I would imagine.
100%.
And then when you want to roll a feature out, if you don't want to annoy people, you've got to roll it out to both or charge for cloud and then not. Like, your commercials are going to get really messy. And then how do you keep them in sync? It's not really a problem I've had to think about for a long time. But if you want someone that wants to legitimately and genuinely work on a desktop, their data needs to be either on that desktop or on a local server if it's truly desktop. So then how do you make sure everything's synchronized? If not, if you go, well, actually the application runs natively on a local device, but the data's stored in the cloud, it's effectively the cloud in all but name anyway. So why not just make it a cloud app? I don't know. It just seems a strange move to me, and it feels like trying to appease people that are resistant to cloud, but are not close to TaxCalc, and I don't know the inner workings. But it feels like they're maybe making a bit of a rod for their own back and just pushing a difficult conversation down the road potentially.
I don't know about. Yeah, I can see that scenario, but I remember the days where you had to take an accountant off Iris, and it was so difficult to do. So what you would generally tend to do is get the practice to run both softwares at the same time, and they would onboard their new clients to the cloud-based software while slowly migrating then client at a time. As a project, you would migrate them one at a time over to the cloud system, which meant that you had continuity at all times. And it brought along the team with you to manage that change and that transition. So I think what these guys are doing is just the same as you would do from exiting from one desktop software to a competitor who is cloud-based. They've just done it internally. But you're right, it will be a mess when it comes to the maintenance of that and the prioritization of it, and what happens, who takes priority. So maybe this is the point. That's why they're saying they haven't got full feature parity, because they're rolling it out in a much more progressive way. But it's inevitable that they have to do this. I think that's the main thing that we take from it, is it's been long overdue. They have a great connection with Engager, and then they've got this good other features to it that are also all cloud-based, but they themselves have not yet made that transition. So let's see how we go.
Yeah, like, fair play to them for trying to accommodate the clients.
I've got something different and ending on Mimo for a moment. The Swedish fintech that was originally born for cash flow and payments has now stepped into the accounting workflow with Mimo Associate, an AI colleague designed to chew through the painful parts of month end. God, this is a very different move for them. So it's a coordinated cluster of agents where one chases missing documents, one codes and reconciles transactions, another flags variances and suggests prepayments or accruals. Basically, the pitch is that firms spend 70% of their billable hours on brainless admin, and Mimo wants to cut that in half Crucially, the AI associate doesn't try to replace the tech stack. It sits over Xero, Dext, and any other GL, acting as a smart layer rather than another system that you need to operate with. It's early access and it's primarily aimed at outsourcing teams and firms with recurring month-end cycles, with pricing still opaque. But despite the hype, even Mimo admits you can't eliminate the close, and you can only strip out the email chain, spreadsheet reconciliations, and the weekly hunt for missing PDFs. So the question really is whether this is the next genuine AI labor saver that we need and wanted from Mimo, or another overly automated promise that needs a very human reviewer at the end of it. But Mimo Associate, I keep on struggling to say Mimo Associate. We need a better name for it. Mimo Associate land in the middle of an arms race. You've got Adfin automating the receivables, and they're doing some of that AR type work that I guess we expected from Mimo in some way. Intuit showing off their agent frameworks. You've got Mayday with its month end, and you've got every vendor claiming to then help you run the close. So it's very interesting to see how this plays out. I think Mimo's stance on it is that they've got a smart assistant that's layered on the top, not a replacement, and it will resonate better with UK firms than the end of the close nonsense that we see floating around. So if it genuinely does half the reconciliation grind that we see without forcing some sort of migration to a new Mimo-based system, then I think practices will listen. But I guess we need to see what the result and the proof is in the first quarter end that they're under pressure. Let's see what happens for those that use and choose Mimo Associate. But it sounds like a good little addition, pivot, a change. What do we call this? I didn't expect this from Mimo.
It's just creep, isn't it? I suppose, and like we've seen it with a lot of apps, and it's just the
Well, you get the
function
Mimo creep. That sounds awful, Leigh.
I don't mean it in that way. It's like function creep, though, right? The jurisdiction of apps, I think, over the last year or so, we've seen continue to expand as you get approvals going to Dex and you get receipt capture going to Approval Max, and banks starting to come out with accounting products and things like that. And so, yeah, like it makes sense. It's the kind of trajectory that's been established a little bit. And I just wonder whether or not there's going to be some second order consequences with people like Mimo after the earlier news story about the API metering, because on one hand, if they want to be a layer that sits on top of that, that might have thrown a complete spanner in the works now for how this model works. But secondly, how much further would Mimo have to go to start stepping into some of Xero's functionality? Actually, if you're already in here for payments, let's just let you reconcile while you're here. And it might be a bit of a nudge to get people to start moving into that accounting space and just begin to start adding some general ledger functionality. But the other thing that popped out from this as well that I will take umbrage with on John's behalf is the insinuation that accountants are spending 70% of their time on brainless admin and manual tasks. I mean, someone's got to do the work at some point. Like, I think I could describe my own work as 70% of my time is doing manual tasks because I'm doing my job. I can't automate everything. So I don't know. There's probably like a liberal use of that statistic there, I think, that they're using to make a point.
Yeah, let's see how they actually get on. Like you said, it might change things now with this Xero announcement. But I think that's very good app news for once without any accountant on it. But hopefully this is good enough for the fact that we managed to take the really tech-heavy angle this week. Thanks for joining us on today's podcast. If you liked it, then let us know. If you need some more from John and Ryan on this, then also let us know, because we'll make sure that we get their perspectives on all of the news articles that we covered this week. Please, if you haven't already done so, join our newsletter so that we can give you the updates, and that way you get a little bit of coverage, whether it's through the podcast, through the shores, through the newsletter, or through the community. And we are very much looking forward to having a bit of a Christmas off and coming back in the new year with a whole fresh new approach. Thank you, Leigh, for joining me on today's podcast. And we hope we hear more of your voice on the podcast in the new year too.
Me too. See you soon, everyone.